What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to see selling across the board as we continue into a short-term downtrend. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, and please don't forget to smash that like button and help this video reach 2,000 likes, and I will continue bringing you the Hot Stock series. Alright, today in SPY we were down 0.66% and we see SPY continuing to get rejected below that level right around 406, and we're coming down to this support zone around 401 and the 50 moving average right around 399. So there is going to be one more line of defense for the bulls, and that is going to be this support zone right around 399 to 401. And if that level breaks down, look for a retest of about 393. And if the bears can drive SPY down to 393, that is going to be incredibly bearish, and we are likely not going to see a continuation of the bull trend. So keep in mind, market structure is always based on price action, and right now we continue to see price action making lower highs and lower lows in the short term. And the only way to have confidence that this is still possibly a bull market structure is that we need to put in a higher low and then go make another higher high. So you can clearly see in the short term we are making lower highs and lower lows, but in the longer term, what I call the medium term trend, if we were to come down here and put in a support level right around the 50 EMA and then go all the way back up to make another higher high, you can now see how in the medium term you can have a bull trend, even in the short term that you have a bear trend. So as price action traders, you need to respect the fact that we're in a short-term bear trend, because short-term bear trends can turn into medium-term bear trends, and you don't want to get caught holding any bags. And that is why I told you our risk off level was below 416. So if you went risk off below 416, you did save yourself a lot of pain. Now also keep in mind, you can never assume you are going to get a higher low. You have to let price action prove it. And that is why I tell you, do not catch a falling knife. So you are in a downtrend in the short term, which I define as a falling knife, which means you do not want to be swing trading long positions until we get out of the short-term downtrend. We need price action to validate that the downtrend is ending. So just like I told you during the uptrend, do not try to short this market until we break support, which was that day we broke down through the support level, which was our support trend line, and we've been selling off ever since. Well, now that we are in the downtrend, you do not want to go long until we break back over the resistance trend line. So if you start to see price action bouncing and then we get a break of the resistance, that will be your signal that we could be ending the downtrend and could be going back to continue the uptrend. So when I tell you let price action do all of the talking, that means in the short term, you need to be expecting lower prices until we get a confirmation of a bounce. And as you can tell, we are just making lower highs every time we bounce, which I like to call dead cat bounces, because you are in a strong downtrend and you're only getting bounces because the cat hit the floor. So you're getting extremely risk off while we're below SPY 416, unless you want to take a chance trying to catch the falling knife right around 399 to 401. And while you can have great risk reward ratios trying to do that, you also have the lowest probability to win that trade because you're going against the short-term downtrend. So watch this support zone right around 401 and 399, and you're not getting bullish until we can at least break back over 408, but definitely back over 416, because that is the risk level that I have defined as the line in the sand. And I think you need to be a lot more risk off and bearish below that level, and we are still below that level. Now, if you're looking at just the average drawdowns of the backtest, you can see we are now below the average drawdown, and we're somewhere right around 2011 from the backtest. And 2011 did have very positive forward-looking returns in the next 6 months. So while we are getting somewhat of an average drawdown, we cannot just assume that that doesn't mean we can't go lower. So please do respect the fact that if we break down below 399, we could be getting a lot more bearish, and that does mean that the backtest could fail, so don't get sold on an idea. While that backtest has never failed looking back 35 to 50 years, there's always the chance that this could be the first time. So do not blindly just throw all risk management to the wind and just go all in long positions while we're in a short-term downtrend, unless you are a long-term investor and do not mind holding for multiple years. On the NASDAQ 100 triple Qs, we were down 0.99%, and you can see the triple Qs did come down to the 50 daily moving average today, and so far that level is holding up as support, but we are below the risk off level because the triple Qs are still below 314. So just like I said on SPY, you're only waiting to get more bullish until we can get a bounce and break this resistance area, and then you will have a lot more well-defined risk and a lot higher likelihood that the downtrend is ending. Now to the downside, you could blindly try to buy at these support levels, but that is going to be a very low probability trade as long as you're going against the trend, which is still a short-term downtrend. So if we lose this support right around 304, you're looking for the next support zone to be right around 300 and then 296. If we get down to 296, that is going to be bearish, but that doesn't mean we won't be due for a bounce to put in a lower high before we make the next lower low. So follow price action very closely here and do not blindly try to swing long positions while we're in a short-term downtrend. And if we do get a bounce, keep in mind it could still just be a lower high before the next lower low. So watch that resistance right around 307.5 and 314. And downside support will be right here at 304, 300, and then 296. In the Dow Jones, we were down 0.57%, and the Dow Jones also tested the 50 daily moving average. And so far, that level is holding up as support, and that support zone is going to be right around 321. Below 321, you're looking for support at 319, and below 319, we're looking a lot more bearish for the gap fill below right around 306.8. So you're getting a lot more risk off below 319, but you're already risk off below 333, and we are in a short-term downtrend, so you do need to respect that. The downtrend isn't ending until we get back over our risk level at 333, and you will want to look for resistance right around 329 and 324. On the Russell 2000 IWM ETF, we were down 0.92%, and IWM is also below the risk level of 191, which means we could still be trending lower in the short-term downtrend. You could see a lower high and a lower low in the short term, and the next support level is right around 184.5 and the 50 moving average, which is down here at 182.5. So respect the fact that we're in a downtrend, and upside resistance will be now at 191 and our 20 simple moving average at 193.5. On the ARKK ETF, we were down 1.66%, and ARKK did lose yet again another support level, which was right there at 43, which is no surprise because we know to be risk off below 47 because we're still in the bear market. Below 43, we could likely come back down to 40, and below 40, you're looking for a retest of the low at 36.5. Upside resistance levels will now be 43 and this previous high right around 46. On the VIX, we were up 2.54%, so we continue to see the VIX spiking up above 24. And while the VIX is above 24, you need to be more risk off because it's going to be a lot more volatility and a lot more volatile market. You can get a lot more bullish if we see the VIX crushing down below 24 because it'll likely go fill the gap at 21, but wait for the price action to confirm the VIX is crushing. Otherwise, we could continue to spike into the 30s. On Bitcoin, we're currently up 3.17% as Bitcoin is breaking down ever since it got rejected from that resistance, and the next likely support is going to be right around 19,000, and as you can tell, we are currently bouncing off about 19,500. Just because we're bouncing doesn't mean we can't come down to the previous support, but this could be a lower high before we get there. If we break 19,000, it's likely we could be trending down towards 17,000, so do be mindful that if this support fails, we could be seeing lower prices. But in the longer term, it is very likely crypto winter is almost over. So if you are bullish on Bitcoin in the longer term, you can accumulate at these prices. But as a trader, you need to respect the downtrend, and we are in a downtrend until we can at least break back over 21,600. On our big tech hot stocks, we have Amazon down 0.73%, and we are risk off in Amazon while it's below 136 because it's likely coming down to try to fill this gap below. And we do have support levels we want to watch at 128, 126, and 123. Remember, risk off means we're expecting lower prices while we're in the short-term downtrend, so you're not getting risk on in Amazon unless we start seeing a positive bounce off support. But even if we get a bounce, there's still the possibility it's a lower high before the next lower low. So we'll need to come all the way back up to take out this high at 137 to say that the downtrend is over. On Microsoft stock, we were down 1.07%, and Microsoft is looking a lot more bearish now that it came back down to 267 and broke down below that level. So as you can tell, that previous breakout of resistance is not holding up as support, and that is never going to be a bullish indication. So Microsoft breaking down is another warning sign that we could be seeing lower prices because Microsoft does help move the market, being the second biggest stock by market cap. So the bulls will need to see Microsoft getting all the way back over about 275 to about 279 before they start getting bullish, which means the bears are in full control. Look for upside resistance right around 268 and 270, and the next downside price target will be a retest of this low right around 264, and the next low could be all the way down as low as the 250s. On Nvidia stock, we were down 2.82%, and Nvidia finally closed the gap to the downside, which was down there at 157. And remember, we are risk off while we were below 182. So the rejection from resistance and the strong sell-off could be telling us that Nvidia is trying to put in a bottom, and that could have been filling the gap, but we'll need to wait for a confirmation of this support. If we start bouncing as soon as tomorrow off this gap fill and we can get back over the 50 EMA at 170, things will be looking a lot more bullish, but you're not wanting to get bullish until we can at least break back over 180. Back over 180, we likely saw a bottom that can put in another bull trend, but in the short term, we are making lower highs and lower lows, which means we could be coming back down to retest the previous low at 145. On Tesla stock, we were down 1.14%, and Tesla is testing the extremely critical support, which is right here, right around 282 to 283, because if this level fails, we could be coming all the way back down to 258 or the gap fill at 250. So it's extremely risk off in Tesla if we break below 282. And as you can tell, we do have the lower high, lower low starting to form. So do keep in mind you need to get out of this stock if we see the breakdown. Now, if we do get a bounce from here, it could be a double bottom, which will require the breakout of the previous high, which is up there at 311. And then we could easily get to our price target at 336. So while Tesla is down, it's surely not out until it breaks below this support. And you also have the 50 daily moving average here at 267. On Apple stock, we were down 1.37% as Apple is still risk off while we're below 166, and we did lose that support at 163, so the next likely target is going to be the gap fill at 157, and the 50 daily moving average will also be in that zone. We're risk off below 166, so continue to expect lower prices until we can see a positive bounce, but right now this is a downtrend until it's not, and we could be seeing that gap fill before we go any higher. And Apple is a market moving stock, so if it is going lower to fill that gap, that is going to put more downward pressure on the rest of the market. Now, don't just assume this gap has to get filled, because sometimes these are traps and the top of that gap can act as support. So also look for possible support in Apple at 159.6. On the financials, we were down 0.71% as the financials do look like they're coming back down to the 50 daily moving average to test it as support, which is going to be right around 33. A failure of that support will be bearish, and then we could go fill the gap below. The industrials were down 0.45%, coming back down to the support at $95, and overall still looking like they're in that short-term downtrend. The healthcare sector was down 0.7%, coming back down to our support zone to likely put in the right shoulder, which is overall going to be a bullish development. If we see the healthcare sector bouncing from 126 and coming back up to 134, that is going to look like a very well-defined inverse head and shoulders, which is a very bullish pattern. The energy sector was up 1.5% today, breaking back over that resistance at 84, with the next upside price target likely here at 86.7 and the gap filled just below 88. You could stay bullish as long as we're above 83, but look out below because we could be going to fill the gap right around 80. So jumping back over to the S&P 500, we are in a short-term downtrend, which is a falling knife scenario until we can break the resistance trend line, and then we can start talking about retesting the resistance in the 420s and possibly go back into the medium-term bull trend. Remember, all of this data is still completely in line with the backtest, and we're seeing a very realistic drawdown from what we saw in the backtest. So there's still a very real possibility from here that we could still try to make a higher high, but we cannot ignore price action just because of a backtest. So while we do have the backtest and it is something we do want to pay close attention to, never get sold on an idea, always follow what price action is telling you. And right now, price action is still telling us we're in a downtrend until we break resistance. Remember, I have the Stocks Channel Discord where I give all of my intraday updates and analysis to help you become a better price action trader. So if you are interested in joining the Stocks Channel Trading Discord community, you can find out how to join our Discord server by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking for more information about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.